Hello guys, this time I am good. I come at 11 o'clock, which is very good. So the subject of today is totally different from trading, which is about investing. Hello Rahmatullah Modi, hello. So we will begin just in few minutes. Let's have some people here, and then we can begin our session, which is today about investing. And generally, whenever we speak about investing, we speak about Warren Buffett. So this is the title. Sorry for that. And hello Wiseman, hello Samir Ismaili, hello Ben Misho, how are you? So today it will be an interesting subject, and hope you guys you help me with all the information you have. I will try to explain as much as I can. Hello Hussam Ata, how are you? So the beat. Okay, so in general, one of the best known investor in USA and the world is Warren Buffett. Okay, and it means through all his life he was been doing investing. It means this is his thing, that he knows what to do, and he doesn't just invest, but he manages those companies because he has a word. Because it is not as you might think, it's not like me or like you or anyone else who have, let's say, not big money. When you buy, for example, when you go to a company and you want to buy some shares, okay, you buy shares, but you don't buy parts of the business. Okay, parts of the business, what I mean, it means a percentage of the business, like 10%, 20%, to 70%, or 80%, or the whole company. Okay, so this is the difference between us and between him. And you know, time also, you know, he began like investing when he was young. And understand, this guy, he was raised in the money. It means he's not like other people who are just poor and no education, and he make millions, like the trader Jesse Livermore that I spoke about. That was a trader who was a poor, and he was just a child, but he made millions of dollars from the market when he understand how the price moves. Now Warren Buffett is totally different. Okay, and so Rahmatullah said, so I will be just beginning to speak, and then we can begin to have questions and answers. Hello Nasi Delanochi, hello Albors, how are you? Thank you for yes Albors, I have sent you an email just right now. Please, here we are going to do a session with 2 hours or 3 hours. I don't know how much it will take. We are going to speak about investing, okay? And then after that we will see about your thing, about the Gumroad library. Okay, so let's begin with Rahmatullah Modi. He said, hello Kareem, sir, I have a question regarding stock. Sometimes I see stock does not have volume, like 12,000 or 30,000, 50,000, but the stock is so volatile. Okay, So this question is out of the subject, but I will answer it. And please try to feel feel free to ask any questions, because my aim is we speak to each other and we share information. And the subject of today is, maybe there are some of you who know better than me, because it is a big subject. Okay. Now, he said that there are some stocks that are has small volume, but they are very volatile. It's that because they have low volume, that's why they are volatile. Okay, it's just because of manipulation. If the stock, for example, I will give you an example of so just bear with me, and all the other guys that you are watching me right now, please be patient, because some people are asking questions. Whenever someone asks a question, I will stop and I answer that question, and then we go to another question and we go to our subject. Okay, so let's explain by going there and explain. Okay, check this. For example, let's say a stock is $10. Okay, now the volume is, as he said, 12K. It means just 12,000 shares. Now this 12,000 shares, it means sold and bought. Okay, sold and bought, it means some shares are sold, some shares are bought, so it's an addition. Okay, this is 12K. Now, what is the first remark that you have about this 12K? What is it? It means few traders. Few traders, what does it mean? It means that in this stock, we have only few traders. 12,000 shares, it's just a little bit compared to $10. Now, one here, a trader, okay, he can do whatever. He can do, for example, let's say he do selling short. Okay, he comes to this and he sell, let's say 8,000 shares, sell short 8,000. Now this stock, which is 10, it can go to 8, for example. It can go down to 8. Now, why you see the stock is so volatile? Because this guy has shorted 8,000 shares. That's why the stock has been going down and it is volatile. Now, why this 8,000 shares make this difference, which is $2 from 10 to 8? It could be 9, it could be 7, it could be whatever. But I'm just trying. 8,000 shares shorted, it took $2 from the stock. Why? Because the volume is so low. Okay, so the volume is so low, this volume. So you understand why? It's just because the volume is so low. The volume of this stock is so low. That's why these stocks can be manipulated. These stocks can be manipulated. Okay, manipulated. Now, let's say someone who doesn't know trading at all, he is new. What if this guy, he has money and he comes to this $10 stock with a 12,000 volume? Let's say he buys 10K shares. Okay, so he buys 10,000 shares. What do you think the stock will do when someone buys 10,000 shares? So the stock here could go to 13, for example, dollars in one day. it could go to $30. Now, because he bought a lot compared to the volume of the day of this stock, he bought a lot. So you understand why. Now, let's give you another example that you may be astonished. Now go to Facebook, okay, where we have, let's say, 50 million shares. 50 million shares, or 50 million K, it means 50 million shares, not K, 50 million volume. Do you think if you buy 1,000 shares, 1,000 shares of Facebook, do you think that you change Facebook a lot? Okay? Even if you buy 1,000, even if you buy 5,000 shares, the stock, let's say it is 175, 72, it will not move that much. It doesn't move, maybe 1 cent or 2 or 5 cents, that's it. Now you ask yourself, why this guy bought a lot of shares, 5,000, and the stock is big, but he doesn't do nothing to the stock. He can't manipulate. So Facebook can be manipulated by small guys. Small guys, these they manipulate penny stocks. Small guys, most of the time they do penny stocks. Okay? They try to manipulate, to play with them. Okay? But these small guys, they will never go to Facebook where there is 50 million shares. 50 million shares volume, these guys will never move a stock. That's why you should see the volume. When the volume is so good, it means you think that that there is a lot of manipulation in the stock. Now, for volatility, there are some people who have millions of shares to buy. Big guys like mutual funds or something. These guys can move Facebook also, okay? And hedge funds who have billions of dollars can move Facebook also because they have a lot of power to buy or to sell shorts. So all these influence the volume. So the bigger the guys are, they can move any stock because they are big, like hedge fund, like a mutual fund. These can move stocks. That's why you see. But there are some stocks that are not moved because there are few traders. Okay. Hope I answered. Hope I answered this question of Rahmatullah Modi. Okay. Now, let's drink some coffee and then continue. So let's go one by one. Juan Di Casa, hello, how are you? He said, Hussam Atta said, what about trading strategies? So Hussam, in this live session, we are going to do investing. Okay, so we are not going to do trading today, but you can ask questions. It's okay. So we are not always with the same subject. It's just to change because some people are interested in day trading. Some people are interested in investing, and some people are interested into swing trading. So I will try just to give so many information here and there. Okay, so Hussam Atta, you can ask questions if you have specific questions about investing and about, let's say, Warren Buffett or any other kind of investing. Now, Trump said, best candlestick that gives a signal. Trump, as I told you before, here in my session, live session, I don't do training. I don't train people in live session for free. Understand that. So asking me the same questions each time, what is the signal or what are the criteria, it's not here that I answer. So Alborz Sadijian, he said, then hedge funds can make a lot of money every day by selling short million shares of Facebook in the open and then buying back in the close. Why they don't do that? And do you think that you are thinking? Here I will try to make it clear for you. Those guys, they don't do selling short stupidly. Okay, they are not stupid to go just in the day and just stay short. No. You are wrong. They have a strategy they follow about news. Okay, so I will give you an example. Okay, so Alberts, I will just explain to you this idea about why these hedge funds, they don't sell short each time and they make money. Okay, so let's give you some example to explain this. Okay, let's say the stock is $50. Okay, this is the stock in the morning, open it at the open. Now here we have a hedge fund. Okay, according to what you said. Now in the morning at 9:30, okay, a.m., he began to sell short. Okay, now in order that this hedge fund, let's say it goes to $45, okay, dollars after a few hours, or it means nearly at the close. Now what makes him succeed? Okay, what makes this hedge fund succeed in his thing? First, a hedge fund doesn't just go in the morning and just sell short without any reason. What is the reason? Why he is going to short sell a stock? Because it is not as easy as you might think. Okay, let's see, the guy is selling short. The stock is going down. 49, 48, 47, 46. What if here there is a mutual fund who is buying at that day? Just an example, okay? A mutual fund who is buying. Now, if there is another guy who is in this stock, he is buying, do you think that this hedge fund has a chance to win? Okay? Most of the time there is no chance, because this guy hedge fund, he do 10 million. This mutual fund, he will do 25 million buying. So 25 million shares bought by this mutual fund will crush this 10 million, and the stock will be going down, then it will be going up very quick, and this hedge fund, he will lose a lot of money. So a hedge fund, he's not stupid just to go on any stock and to short sell the stock. What does he need to succeed? He needs to succeed to have plus others, short sellers, others, thousands. They sell short when they see the stock is going down. They help him. Now when it is going down, at the end this hedge fund will be buying shares where the others are still selling short, and he is buying, and then the stock goes to 45 or 44, and then he begin buying, and then he will have all this profit. So understand that a hedge fund, most of the hedge funds, they don't do very quick day trading. Hedge fund, they do long long investment. If they sell short a stock that has problems. So I will give you an example. GE, for example, GE, which is General Electric, which is a very, very old company in USA, and it is one of the Dow Jones. Okay, it was 33 like 1 year ago, and now let's say it is 16. 1 year and a half. Now the hedge fund, they do this. So the hedge funds, they sell short this company for many months, for 1 year or 2 years, and if they succeed, because this company has problems, they know they have problems, and that's why if, for example, mutual funds, they know that this company has problems, most of the time they will not buy it, they leave it, or they begin to sell. So the hedge funds come to this company when there is no interest from mutual fund, and he begin to sell short, and the other people, they come, and to finish, other people come, sell short, until this company in 1 year or two goes from 33, now it is $16. Okay, so because they know something wrong about this company, and if they are wrong, they will lose money. So it doesn't mean that when you are big, you always make money, because there are other bigger than you. And a hedge fund, it doesn't mean that when he go to a stock, he sells short. It means that he succeeds all the time. But in order to make sure that he will make money, he will see if this company, maybe they have problems. They are not selling cars, like selling things, what they sell, electricity or something. General Electric's selling electricity, or they have problems where they work, okay, or their projects are not so good now. There are other companies that are better than GE. That's why you see this company is going down. That's why they sell short, because mutual fund, they don't sell short. No selling short by the government, but no selling short. So mutual fund, they don't interfere when the stock is going down. Even if they lose money because a lot of short sellers comes, the mutual fund can lose money also, because short sellers are a lot. So it depends. It depends on this stock. It depends on the reasons why this hedge fund is doing this. So a hedge fund doesn't just do day trading. If they want, most of the time, they don't do day trading. For example, they are either long, just to explain to you this, to understand. If you go to George Soros, who is very well known guy, so if you go to his portfolio, you can search for it, portfolio. You will find, for example, let's say he has 75 stocks. You find, for example, let's say 45 long, going up, it means he is long, and what is left? Okay, so let's say 25 or 30. Okay, 30 is short. Okay, so why he short this and he is going long? Because he has an opinion about these companies, and this stays opinion of these companies because he stays long. It's not 1 day, it's not a day or two, because he wants to make money. You know, well, when you go long, you go for 1 year or 2 years or 3 years, and some companies he can make a lot of money. If these companies that are shorted go down so good, he can make a lot of money. But in what he does, it doesn't mean that all this 45 he will be good and 30 he will be good. There are some that are losers. Okay, there is some kind of risk management. He is a guy who studied risk management. He knows what he's doing. Okay, so let's go back. Hope who is this? Albords. Hope you have gotten an idea about this kind of hedge fund and mutual fund. Understand that there is always a risk. Although you are big, there is a risk. For example, I will give you a simple example. If you are in 2008, when the whole market is going down, who will make money? The people who have shorted like hedge funds, they will be making a lot of money that year. The investors, they lose a lot of money. Warren Buffett has lost in that year around 50%. The stock, his stock that we will see later, okay, it was $195,000 a share. It goes to 90 or to 85 in that year. So you will see that even Warren Buffett, he lost money. But since he's not a guy to sell, because it is his companies, he owns these companies. He has a lot of money from them. Not from the stock, because he doesn't care about the stock anymore, because he owns the company. Understand that the company has profits, and he will take from these profits, and it's a lot of profits. He is not like us, okay? When you have for example, you buy 100 shares of Facebook, and then if you want to, if you have money, you should sell in order to get money. But there are all the companies, most of the companies that he owns have dividend. Dividend, if they give 5 or 7 or 10%, all this money goes to his pocket, where he bought millions of shares. So you understand that things are not the same for someone who is big and someone who is small. So let's drink some coffee and continue to do the session. Now the other question: do you like to use leverage when you trade? It's a question from Pascual Calvoza. Okay. For me, I have used it at first. But the problem here, understand that leverage, it is the money that you borrow, and it has an interest rate. Understand that this, you have two things that you should pay. The first thing is interest rate. It means you are paying interest rate. It means like when you buy a house. Okay? The house you didn't buy, but you just, when they say to you 6% each month or 10% or 5%, you are paying from your own pocket. Now, second thing, you double the profits and you double the loss. So here is the good thing. Pascual Calvoza, if you know how to trade, you can make money even from leverage. But let's say you just beginner, you are just medium, you begin to trade. Let's say you lose money in 1 month or 2 or 3, or in 1 year you lose money. Do you know that your money, that your loss is doubled? Because you risk your money. Okay, let's say you lost 10%, but you lose 10% of the other money. So how much you are losing? You are not losing 10% at the end of the year, you are losing 20%. Okay, so for me, if you are a beginner, my opinion, it's just my opinion, stay away from leverage, because they eat you. Okay, you will be paying interest rate. This is one, you are paying. It means either you succeed to make money or you lose money. The interest rate is going. And if you are doing, for example, like a hedge fund, for example, you are working and you have many stocks and you sell short some, you are going long for some stocks, like a hedge fund do. Like, understand that a hedge fund, it is not his money. Okay, even the hedge fund, the fund itself loses money, he is out of it. He doesn't pay from his pocket. It's the other people's money, and he cares because it is his fund and he is managing the fund. But the problem, it doesn't affect himself, his money. But you, it is all your money. If you are paying interest rate to your broker, it is an expense that you should add to your business. So, if you are good at trading and you begin to see money in 6 months, 1 year, 2 years, 3 years, and you are good, you can use the leverage, you can use margin account, and you can make a lot of money. This is good. But if you are a beginner or just an intermediate, just stay away. Stay away because, you know, you are paying the interest rate, and especially if the interest rate is big. I see some especially this proprietary trading brokers, be careful of them. Okay? Because what they do is they give you a lot of money, but if you lose, your account is wiped out. Okay, so play just little bit and don't go over. So this is about leverage. Pasquale, Trump said, "Did you pay someone to train you? Why I should?" This is YouTube. Okay. Here is a good question about Trump. He say, "Did you pay someone to train you?" Okay, this is one question. Second, why I should? This is YouTube. Okay. This is YouTube. Man, YouTube doesn't do nothing to you. It's I or other people who give information. YouTube will never teach you. Okay, this is first. Now, second, you say, did you pay someone to train you? I did it by myself because at first I have lost thousands of dollars at the beginning because I don't know, and it takes me time to study everything again by myself. Okay? And I succeed. But you, if you can do that, yes, you do it. But at that time, if I found someone who is serious, he knows what he is doing. I see some people, I find them, they don't know nothing about trading, because whenever I ask a question, see, when you ask a question and you don't have an answer about trading, you send me, you ask me anything. For example, why is that? Why is that? Why is that? Why is that? If I don't give you a reason, okay, a clear reason, you understand and you learn, this is not teaching. So that means that the guy who is teaching, he doesn't know nothing. That's why, for me, if I find someone who is serious at the beginning, okay, I will be paying to learn. Right now, if I find someone who is an expert in companies inside and he give me more information, I will be willing to pay. Okay? This is how the market is. Some people know, some people they don't know. So if you don't pay for your education, why you go to a college, you go to university and you pay? Why? Why you go to be a doctor and you just read books? No, you can't read books and then you do surgery on people. That's the question. So for you, Trump, it is not YouTube that teaches you. It is people in YouTube that they teach you. For example, for me, I said, okay, you don't want to take my training. It's your problem. I don't care about you. Do I care about $50 or $100 about you? I don't care. It's you that you need me. It's not me, I need you. So understand this. You should understand from now what you are doing here. Now here, for me, I am just giving a general education about investing, my strategies, and general education. I'm not training you here. I'm not giving you my secrets here and tells you when to buy, when to sell, where to put stop loss, how to follow the trend, how to manage your account. This is money. This is a training with money. It's not something that you find on YouTube. If you find it on YouTube, believe it or not, just stick with this guy. He gives you everything, and you will become a good trader. That's it. But I'm telling you the truth because I am in the market since 2010. Okay? The market, if you go the market without knowing what you are doing, the market will take thousands of dollars, and he will wipe out your account. Now, instead of doing some education with $100, $200, or $300 or $500 or whatever, to have an education to know what you are doing, and then when you go to the market, you go prepared. Anything happen, you know why it is happening. You don't ask anyone else. This is why I give my teaching and my training, and I have taught thousands of students before, one-to-one. Before I don't give my training on online. I just teach person by person. Okay, so why the people have books? It means why you buy books? Because it is part of your education. But in the books and in YouTube, they don't give you a direct strategy. They give you generalities whenever you go, but whenever you are serious, you should go to a training. If you don't want to, just continue all your life learning from YouTube, guys, which is very good. Okay, this is called general education. Okay, it's not strategies. It is not strategy that you make money, somebody give it to you for free. Okay, it's not. Believe me, and you will discover this after a few years, turning around, searching. You can succeed, yes, but majority of the people, they don't succeed. 95% of the people, they don't succeed. It's just because of this. Okay, so let's go to another question. Trump, this is my answer. For me, when I have this session, I'm not asking you to buy my training. Okay? The people who buy my training, they just see one of my videos and they buy all my training and they are training. So, because they know what they are doing. Now you, it's another thing. You want something free, like you are in a socialist country where everything is free. You go to education, college is free, hospital is free, eating is free, and you know this is not a socialist country here in America. It's capitalism. Okay, if you know something, you can sell it. Thank you. Now, Pascual Calvoza said, "Golden subscription. It is amazing. You will learn a lot." Thank you very much, Calvoza. You know, Pascal. Hope I read your name quite good. You seem like Calvoza. It looks to me like Italian or something. The people who want to learn, they don't ask why I should learn. This is the difference between someone who is serious and someone who is just looking for free information online. Okay, if you go to books, you find how to swing trade, all the strategies. Okay, go read a book with $10, or go to a public library, or go to Barnes and Nobles, for example. You find books, you go there, you have coffee with whatever, and you just read books and hope you make money from this kind of books. Okay, so thank you very much, Calvoza, about your witness. Thank you very much. I appreciate that. Trump said long lower shadow is the best candlestick. Okay, you are telling me sorceries and magic here, so I don't understand and I don't follow what you say. Now, Albor said, Trump, if you already know the answer to your question, why do you ask? Okay, let's see. Is GE going to bankrupt? I don't know. Because see, it was $33, now it is 16. If things change for this company, I don't know, because you should be an expert to go and see why it is losing money. Okay? So this is how the people, they know. They should see the balance sheet. They should see information about earnings, and they see why it is losing money. Or you can call them. You can go to GE. There is an investor section in all websites of businesses. It's called investor sector. You call them and you see, I see that your stock is going down. What problems do you have? Because I am an investor, or I want to invest in your company. Okay? So you can ask. You can ask directly. Why you go ask other people? Or you can see what we call analysts. Okay? You can see analysts, and you can see what they say about this company. Okay, so it's very easy. Hello, Chris de Guzman. How are you? It's a long time I haven't seen you. How are you, Michael Martin? Good evening for everybody. So now another question from Albors. Why Warren Buffett doesn't do swing trading? Seems with the huge money he has, he can make money, then invest and wait, not the stocks he owns, but other companies in his portfolio. Okay, Albors, this is a very complex question. Investing, he needs time. And staying 1 month or 2 months or 6 months a company doesn't show its strength in 1 month or 2 or 3. Okay? But sometimes he does buy some companies for 1 year, 2 years, 3 years, 4 years, and then he sells them with a profit. I see one of his videos speaking about Chinese company. He bought it for 3 years or 4 years, and he sold it with a profit. He does what we call position trading. Position trading, it means he knows a lot about a company, so he has an idea. It can move this 1 year or 2 or 3, so he buys it and he sold it. But he has his own portfolio. This is for the long run. He likes the business itself. For example, Coca-Cola. Okay? He likes the business. If you ask him right now, sell 1 share, he will never sell, because he get dividend, and since he's with the board of shareholders, he can change people in the company, because he owns a lot. This is why Warren Buffett is so strong. Because when he buys, he doesn't buy 100 shares, not 100 shares like us. Okay, like everybody else. He is buying part of the company, millions of shares. And I will show you right now, Albors, since we are doing Warren Buffett portfolio, I will show you his stocks or his companies he owns. Okay? And another thing that Warren Buffett doesn't do swing trading, because he has billions and to buy. He doesn't buy like we buy. Okay? He goes to he can buy from the market, but since his purchase is big, it needs a special transaction. Okay, it's not like our transactions. He should see someone who has millions of shares he wants to sell. He doesn't see someone who has 100 shares. Okay, because if he buys like this from the market, the stock will be going so good in few days, and the people all see and they understand that it is Warren Buffett who is buying. So he buy less or do big transactions. These things, we have no knowledge about it. You know why? Because it needs a lot of expertise. It needs people who you should pay banks and the other to do this, or big brokers to do these transactions. And he knows a lot because he was a stockbroker and his father was a stockbroker. So you should understand that these guys are in the stock market from the beginning. So it's not just he comes 18 years old and then he becomes famous. No. Okay? So this is one of the things. Now, Empty Sky, how are you? I see your ID. Thank you very much for coming. Rahmatullah said, I have a question about earning. Sometimes I see minus 0.0 or 0.04, which is better. Minus. Oh, okay. So he said, I will, Rahmatullah, I will show you in the diagram I show you right now. So wait for me. Okay, Rahmatullah said, analysts, for example, in the earnings, analysts said that the earnings per share, EPS, earning per share, EPS, should be minus 0.04, or he give me another one, minus 0.05. Okay? So which is better? Now, this is the better, 5. Oh no. Oh, it's I think first try to just to understand what does it mean, this, what they say, EPS. It means, let's say the stock is $20, okay, and 9 cents. So if you take 4 cents, it becomes $20, okay, 0.5. Now, if the EPS is 0.05, okay, so 20.04. So when you say which is better, in terms of what? It means the analysts say bad about this company, that first it is losing money. It is losing money in each share. This is the most important thing you should know. So losing 0.05, it shouldn't be the better, because it should be the worse, because this 0.05, it will be taken from 2009. So here the stock will be more down. So this is the worst. Now this is when they see that the company is not or will not make better money this quarter, because we are speaking about quarter. Okay? So the analysts say that when they have the earnings per share, it means when we have the earnings and they divide by the shares, the number of shares, the stock will be losing. But they don't put two things, okay? They should put either 0.04 or 0.05. So 0.05, it means they are losing more money than 0.04. Okay, so this is just to understand that to understand the thing. Okay, so hope you have understood this thing. Now let's go. Trump has said GE has been going down for a long time. Yes, I made a video about the Dow Jones, and I give this example of GE in last of my videos on YouTube. Okay, yes. So for you guys, when we speak about Warren Buffett investment, Michael Martin said, "Are there any books that you recommend reading?" Yeah, you can read anything. Anything that you are going to read, you can just check my YouTube, and you say recommended books. You will find a list of books, but you know there are a lot. For me, those books that I put, it means those books I have read, but I have read hundreds of books, so I will just put some. So anything that you are interested in, if you are, for example, interested in investing, you should read as much as books, and you compare them, because each one has his own ideas. Okay, so you compare them and you see. So do you I see there is a problem with the chat. It doesn't let me put right on the chat thing. I don't know what's the problem. It says sign in the chat. I am online, so why should I sign again? I don't know where to sign. So I see your the last thing I see is Michael Martin. Are there any books that you recommend reading? So I ask you the question, have you a possibility to write in the chat room? This is just a question for you guys, because I see the number of people watching is the same, and I don't know if there is a problem with the chat room that it is here. So is it possible that someone writes in the chat room? Oh yes, you can write. Oh, okay. That's good. And I see the people who are watching are 10 people. Is it the same number that you have there? Because here I see 10. It doesn't let me write in the chat room, which is okay. Hello guys. Yes, now things have changed. Thank you very much, you guys. So I have a problem with from here. It's not from come back. Still have questions. Facts. Okay. So thank you very much. Now 15, 16. Yes. Here what I see is different. It stops. I don't know what's the problem. Hi again. How are you again? I had the same thing. I just signed in again. Yes, I think it's all from YouTube. It's not from me. Okay. And it says it didn't let me write anything, and I clicked on sign in again. Yes, me also. How do you get news about the stocks? So Wendy Kaza asks this question: how do you get news about stocks? Now, news, you should go to Yahoo News, you put the company name, and you will see. Or you can see your broker if he has a news for the company. Whenever you show a company, it will show you the news. Now, my chart that I'm using have news. Okay, whenever you put a stock, it gives you the news. I will Wendy Casa, give me a minute. I will show you from the chart. Okay, as you can see, this is Bank of America. This is the stocks here are Warren Buffett portfolio. So I will just let you know. Okay, when you take here in this chart, we have three parts: 1, 2, and 3. 1 here when you are searching, or you are looking for the market, or you are looking for industries, you are looking for sectors. All this here is number 1 here. Number 2 is your portfolio, or any portfolio you want to add stocks to follow, and this is what I trade. Number 3 is here is the news. I click, see, my stock that I put here is Bank of America. If I click the first here, I find the news. It's coming from Comtext. It says 8K Bank of America Corp D as filed the Security Exchange Commission. It means it shows you what did it file, and the best way is to choose. For example, here it says shares of Bank of America have bullishly opened above the pivot of 32.62 today. Here they give you analysis of what did happen or something like that. Okay, so this is how we know. If you are interested, let me see here. Wendy Casa, I have a free training about the chart. You go to my website and you find a free training. Please take this training about my chart. It will show you everything in the chart and how to use it. This is a very simple training. It has 5 or 6 or 7 videos. You understand how you see the chart, and what you can do in the chart, how can you search, a lot of stuff. So you can study that. Okay, thank you very much, Wendy Casa. Okay, now before we continue, since we are speaking about Warren Buffett, so do you have an idea that everything that Warren Buffett has is online? So do you have an idea that it is all online for you guys? For those who don't know about Warren Buffett portfolio, you can find Warren Buffett portfolio and a lot of hedge funds and a lot of mutual fund portfolio. So it is easy. For example, you want to do like Warren Buffett in terms of choosing stocks. Let's say you don't have an idea about investing and it's all not clear for you and you need to study a lot. You can begin and choose of some stocks of Warren Buffett and you can use them. This is just a general thing. Now let's, in this presentation, let's I show you some of stocks of Warren Buffett. They are, I think, 47 or 48, because sometimes they change. Okay, so it's not the same for 10 years. They change because he sold company, or he replaced it, or it's his decision. Okay, so let's go to the chart. Okay, Now, so let's go where we put the portfolio. Okay, so all these that you see on the left side are his stocks. Okay, now Bank of America is one of his companies that he bought. Wells Fargo. Okay, so as you can see, Warren Buffett doesn't look really, he looks for companies that can grow and that are successful. So he chooses Wells Fargo and he chooses Bank of America. Okay, and Bank of America was doing good since he bought it. So let's see the yearly. So when the crisis happens in 2008, you know, this is a yearly, each one is yearly. So in 2 years, it kills all these years of the from 2000 to 2007. All these years have been good, but 2 years has taken all what is that. But understand that Warren Buffett, I think he bought it in 2010. He bought it in this red candlestick here. Okay, in this candlestick, which is, I think, in 2010, he bought of America. Now, when he buy it, 1 year, second year, it becomes to be, or the third year, it becomes good, and then it continues to go good. Now, see, let's say he bought it at $13. I think he bought it at $7 because there is, I think, a big transaction. He doesn't bought it at 13 or 10. I think he bought it at 7. Now from $7, okay, or 10, it goes to 32. So understand that Warren Buffett, when he buys, he doesn't buy like 1,000 shares or 2,000 shares. He bought a big part of Bank of America. So he is making right now a lot of money of Bank of America. But see, I don't have the exact year of each company, because some companies they bought it earlier in the 90s, in the 80s, in the 2000s. So if you are interested, you can just go and check which year each company has bought. This you need to have to search. It needs time just to know if he succeeded, yes or no. Okay, so before we continue, let's see some questions. Currently, Albor said, currently 32 analysts have price target and recommendation for CMCSA Comcast. The stock is 36, but the average target price by the analyst is 49, with the most of them rating is as a buy. Now, Warren Buffett, when he wants to buy a company, he doesn't look at analysts because he knows better than them. He knows the company inside. He is not looking at the company outside. Like analysts say, this is just the earnings. So he has more knowledge. That's why when he wants to choose, whenever he buys something, it means that he has a big interest in it and he put a lot of money. Understand that Warren Buffett is buying millions of shares. I will show you some information later. He buys millions. Now for you, I'm telling you, don't follow analysts in order to do your investment. Okay, what is this target price that they are talking about? You buy right now a stock at $36. The stock can go to $20 or $15. So analysts, they have no control of the price. They just have an opinion. Now you should have an opinion because it is your money. Don't take the advice of someone else. You should take your opinion seriously. When you study, you learn how to invest, and this is good for you, because if you make money, it is you. If you lose money, it is you. But if, for example, there are 32 analysts, they say buy this stock, okay, and understand that these analysts are paid, because this company, maybe they pay this analyst to speak good about the company, even if it is doing good, but there is an advertisement, there is some money that these guys are getting. So in order to formulate an opinion about company, don't see other people analysts' opinion, see yours, because you find other analysts, they say don't buy, they give you other reasons. Some they are neutral, some they say if you buy, hold. So you are going to be in vicious circle, turning around about this analysis. For me, I have never taken this analysis serious. They have their opinion as you, and the stock can go only two things, either up or down. So they say what they say, it's their opinion, but for me, I have my own opinion, and understand that sometimes your opinion is better than the best analyst. In 2012, when Facebook was going down, they take advantage of the price going down, and they say Facebook is not an investment. It is not good. I see some people, they say, oh, we will buy it when it is $12. Okay? But right now, when it becomes, when I say at that time when the stock was $25 or $19.99 when I bought it, some people say, I said that it can go to $100. No one believes me. If you go to my old YouTube videos, I have just few people at that time, and they say, no, Facebook will never get 100. Now it is nearly 180. Okay? So you see the difference? You should have your opinion based on something. Okay? It's not just predicting. You don't predict in investing. You should have something. You should know something about the company. Because when the company is good, a mutual fund in the future, they will buy it. If the company is losing money, the mutual fund will never buy it. And then the stock will go down, and then the company may go bankrupt. Okay? So another question about Alborz. He say, am I wrong to assume I will go up soon? Maybe it's not fair to assume all these analysts got paid by mutual funds. No, they are not. Alborz, they are not paid by mutual funds. They could be mutual funds, anyone who has an interest that this company will go up. So if you buy according to what they say, what if they were wrong? What if the stock goes down? So what do you say later? Just tell me your answer, Alborz. Just tell me your answer honestly. What will you say? Do you blame the others, the analysts? They say they are wrong, and why they say this? Are you going to blame them? If you blame them, it means that you don't know, that you are making investment according to other people's opinion. It is your responsibility to take choices. This is your life choices. No one will know what will happen in the market. What if this year the whole market go down like 2008? What if? So there is no one who tells you that this stock will go up or go down. So it is just a prediction. Okay? So you should decide by yourself. Don't let other people influence you. Because these analysts, let's say you and I, we don't watch TV. We don't watch this websites or this TV for as myself. I don't watch. I don't follow what they say. Now, do you understand that they lose billions of dollars? This TV, they lose billions of dollars because these people are there to influence people. It's like politics. They talk to you and they give you reasons in order to influence you. If you go with them, They gain a lot of money. It's the whole market is about all money. When Warren Buffett has bought Bank of America, he has bought it, let's say in 2010. And then when you buy a lot, all these shares that you bought, you should tell the public, and you will find that he is one of the shareholders. Now it is done. He has already bought. Now when you come to buy after Warren Buffett, any dollar that you put, it is a profit for Warren Buffett and for all the people who own Bank of America. That's why you see Bank of America, after he announced that he has bought, the market has been going good. Why? Because the people, they just trust Warren Buffett because he's very famous. And when he chooses something, it means that this thing is good. So you understand? So Warren Buffett influence you and influence me, influence everybody, because we know he is very famous. He picks good companies. So the people, they follow, and there are millions of people following Warren Buffett, and they buy as he buys, and they wait. If there is good money, it's okay. So you see how the people are moving. It means if you don't know, you should. For example, you say, "What's the difference?" I'm telling you the difference. If I want to choose, I will choose Warren Buffett. Then I choose this analysis. Okay? Now why? Because at least the companies he buys, he knows what are worth in real. Analysts have knowledge also, but they are manipulated. They can manipulate you. So sometimes when they ask you to buy something, they tell you about the past. Okay? So I will just, before we continue, I will give you an example. Okay? I have given this example before, but I will just give it to you again. Okay? So, let's say a mutual fund, any mutual fund that you have is just a name and not a stock, okay? A mutual fund index. Okay, mutual fund. This is mutual fund. The mutual fund is going up. It was $70. Now it is 210. After let's say January 2017, January 2018. So let's say we give you one 200 here, 100 here, 200. So how much profit they get? This mutual fund, he get, let's say 100%. Now mutual fund, they are not getting that much, but let's say 12% or 5. This is just an example, okay? Now these mutual funds, what they do, they go to analysts and they say to them, please, I'll give you $5 million if you speak about our fund. This is the fund. Now, this guy, who are analysts, or one analyst or two or three, they give their opinion and they say that this mutual fund, he will not tell you that these guys, they paid him. This is business. So they say that this mutual fund has got 100% profit in 1 year. So what is my opinion? Buy. Now this mutual fund, if they are selling at 200, they are selling. Okay, selling. So the public, it means the people who don't know anything, the public, what they do here at 200, they buy. It goes up like 200, let's say 210, because all the people, they hear this and they begin to buy. Now these people are selling, so they have the same price as 200 or 202 or 198. It means they have the same price where they are selling. Those are buying, those are selling. Okay? So at least these guys get 100 and they will not lose money when they buy. Because if they sell here and they are alone without this kind of buy, the stock or this mutual fund will go down. Let's say it will go down to 185. So mutual fund, they don't want to lose this $15 for each share. They don't want to lose. So understand, it is a game. So this $15, if the mutual fund goes down, this could be billions of dollars. Billions of dollars they lost. So what is the idea? Is they pay 5 million for this guy who is very famous, and he asks people to buy, and then they get this $1 billion back. They get this millions of dollars back. This is what they do, and this is what we call Wall Street business. This is business. You can't ask an analyst why you say buy. He said to you, okay, I have seen that this mutual fund is good because last year he gave you a fact. When he speaks about facts. He knows something that you can get also. But the problem, he asks you buy, okay, according to what he knows. And since he is paid, he will tell you his opinion. Now he get money. This index mutual fund manager, they get money. They don't lose any money from the percentage. Who is the loser? Is the public. Because after 210, this mutual fund will be going down. And all the people who stay buying this mutual fund, they will be losing money. So this is how it works in general. And you can study, you can read more, you can have your own opinion. So this is for me. For me, I'm trying just to make it simple, because this industry of Wall Street industry is so complex, because there is what we call interest. Okay? If you say a company is good, all the people will come to buy it. So those people who own the company will make a lot of money, and it will become a success. Like Google, like Apple, like other things. Okay? 1D Casa said, do you have any idea or news about the company Buffett might be interested to buy? 1D Casa, do you think that Warren Buffett, when he is buying, he will tell someone? So it is a secret. That's why I told you that secrets are not going to be published. But after he bought a lot, he must be obliged to tell the SEC, which is Security Exchange Commission. And one time he has been fined, I think, 980 million. Not 800. $980,000 because he doesn't report what he buys from a company. I don't know why he has done this. I have read in one of the articles that he was being fined because he didn't report some purchase. He buys a company, some 10% or 20% of a company, and he didn't tell the public. Okay, so there are reasons, but Security Exchange Commission is after these guys. They should tell the information to the public. Just the public, they just want to know who owns who, or who owns which company. And you right now you will find information. But you ask me, what company Buffett might be interested in? He will never tell. Even if his son or his brother or sister, he will never tell. This is a business secret. And understand that he is the one who manages the Berkshire Hathaway fund. So no, he will never give information to people, because if he gives information to people, the people they go and they begin to buy, and then they whenever Warren Buffett buys, these guys will have a lot of money. And you tell me, oh, why we don't share money? No. Casa, understand. No one is sharing his money, rich with the poor. He just share his money. No sharing. This has never happened in the past, or in now, or in the future. It will never happen. So try not to be mistaken in life rules. People who are rich, they want more money. They don't want to give money. Understand that. Hello, James Armstrong. You came late today, but it's okay. Now, let's see. Let's I show you the Warren Buffett stocks, and I just give you some information. But understand that if you want to know when exactly he bought each company, you should go to history and you should search, because it's a lot of search, and it doesn't help you. For example, if I tell you, okay, Coca-Cola, he bought it in the 50s or 60s, 70s, what is for you? Okay? It's a past information that doesn't help you make money. Okay? So we are thinking about how we make money from investing or swing trading or day trading. How to make money. Not to study old stuff. But the good thing about Warren Buffett, he has done something that he has never done. So what is this thing? He buys Apple, and he was against these companies like Apple, like IBM, but he bought them lately. Lately, I think he bought Apple, because before, when they asked him why you don't buy like companies, like internet companies, like other stuff, he didn't want to buy, because he said, I don't understand this kind of businesses. How do they make money? Because, and he said, you should not understand everything. He said by himself that I don't understand every kind of business, but the business he knows is something that makes him money, and he knows why. Like banks, he get interest rate, and he get dividend, and he get a lot of stuff. Coca-Cola is the biggest company in the world. They say it's 1,500,000,000 bottles each day sold. Do you understand what does it mean? 1 billion sold a day. It's not in 1 year. It is on 1 day. You see why he buys Coca-Cola? People, they know what they are doing. This is what I am telling you. Now, James Armstrong said, I believe I read Buffett suggests investing 90% in stocks and 10% in government bonds. Have you heard similar? Now, see, I have no idea about. He can buy other things. Bonds or other things he can buy, but you should see his portfolio and what he gets. I think I will get just a minute. I will check if I find that thing. So just a minute. Let's see. There is another website. Okay, Berkshire, CNBC. No, I found yesterday a website. And let's see here. It gives things. Okay. So let's see. Okay. So see this website. Now, as you can see, financials, it has 42%. Consumer staples, 24%. Industrial, consumer, energy, health, basic material. This is portfolio sector weight. But in order to go and to check what is all his bonds and his the other thing, you should go into details. And for me, I am not interested in bonds or in other things. What I am interested in is the way he see companies, because when he buys, as someone has told me, when he buys a company, it is a business that he buys. He knows what this business is making and what is the future of this business. Now, for me, for example, I'm doing all swing trading. I don't care about what the company is doing or what will be doing in the future. For me, there is a trend. I buy the stock. When the trend finishes, I get out. I have my money. That's it. So I'm not staying very long. So in order to stay with very long with companies, you should have a lot of money to put and to leave. This could be done when you are younger. Let's say you are 20, 25, 30, 35 or 40 of age. You can begin your portfolio and you can put stocks and you just leave them. You just do like Warren Buffett do. You just buy and hold. Okay? If the company is that you bought after a few years is a bad investment, it means you lose a lot of money in the industry, and the industry is doing good, but this company you choose is not good, you just sell it with a loss and you buy another one. Okay? So this is how things work. But companies that are doing good, you will never sell. Why you sell? If a stock is 100, it goes to 1,000. Why you sell this stock? What is the reason you sell? Okay? And most of the time, Warren Buffett is looking for dividend. Dividend is something good when you have a lot of money. And this I have explained many times. It means if they give you 2% or 5% or 10%, it's a lot of money that you go into your pocket without selling any shares. This is the good thing about why Warren Buffett, he doesn't sell. Okay, he doesn't sell shares to get money. He has billions of dollars. He doesn't need money. He wants to make more money, not to spend money. He is not a good guy to spend money like billionaires. So let's see if we can go and check his portfolio. I have put you guys the portfolio into my chart. You can do the same. You can go to any stock and any website, and you can see the portfolio of Warren Buffett, and you can put it in your chart and look at it when you have time, just to see why he buys this and why he doesn't buy this. Okay, so let's go to the chart. Now, as you can see, I use yearly. So any of these years, 2007, 2008, this is when we have the crisis. The crisis of financial thing. That's why you see. So Warren Buffett has not bought a Bank of America here. He could have lost a lot in these 2 years. But he bought it in 2010. This is information I think I am sure about. 2010. Now, Wells and Fargo is doing excellent. I don't know when he bought this company, this bank. Coca-Cola, this is the most thing he bought in the past. I don't know how much how much he bought this, $5 or $7 or $6. Now it is $43. The Kraft Heinz company, but this 2 years is doing bad, as you can see. Apple, okay, he bought Apple, as you might know. It was a surprise because he didn't buy Apple before. American Express, he bought it a long time ago. Siri, okay, this is a media, and I think it's all about newspapers he bought. But newspapers, understand, don't see just the stock. This is the thing I will show you. The thing is about what Warren Buffett is doing. These newspapers, he can make a lot of money from advertisements. These companies are making money, although the stock is going down. But this doesn't mean that they are making money. So you should always think about how much money these companies are making. Don't just think about the capitalization. Okay? Another one, US Bancorp, is doing so good. The Bank of New York Mellon Corporation, I think he bought it lately. Delta Airline, he is interested in the defense transportation, major airlines. General Motors, it is the oldest, one of the oldest companies in the Dow Jones. He bought this Southwest Airlines. American Airlines. You think he's buying a lot of airlines? I don't know why. So so he bought this. This is like newspapers, I guess. All these, but they are doing so good. Phillips 66 is about oil and gas refining and marketing, but I think he this in 2017, I think he sold because the company wants back their shares. I don't know, there is, but this, I think it will not be in his portfolio. I just see a notice that this company asks for their shares again. I don't know what kind of transaction is this, but he's getting his money back. USG Corp, Material and Construction. Davita Healthcare is doing this. Davita is doing so good. See, it was only $9 or $5 or $6 or $2 here. It was just 69 cents in 2000. 69 cents. Now it is 68. It's a big money, but I don't know when he bought this company. United, this is another airline. Moody Corporation. This is a new company got into the stock market. So he knows the companies because this is just get listed as a public company. So he bought it. He might know this company before when it is public. This also Synchrony Financial. It, as you can see, it's an IPO. Class A. Here, when you see Class A, it means it is preferred stocks. Okay, preferred stocks, not the common stocks that you see online. Chiva, I think he's losing a lot of money here. I don't know when he buys this. But you see, as you can see, even Warren Buffett, he is losing money in some of his investment. So here, this Tiva, I don't know when he buys it, but these 2 years and this year, it's a big loss, as you can see. Store Capital Corporation, it's a new company, a new IPO. Verizon. VeriSign, not Verizon, I'm sorry. VeriSign Telecommunications. It is foreign. This is a foreign company. And you see, it has been going bad, now it's going good. Monsanto Chemicals is doing good. Goldman and Sachs, he bought a lot from this broker and bank. Visa, you see Visa, how good it is. Okay, it was only, this stock was only 10. Now it is 124. It was $10 in 2008. It was bad year, 2008, but after 9, so it was $10. Now it is 124. So you see how much money you can get here. It's like 10, 12 times. It was 1,200 times. Charter communication in the media. He is interested a lot in the media. I see that he bought a lot of this kind of newspapers. Although you say to yourself, why he is going to newspapers, although the newspapers are dying? But I don't know. But these are doing so good. So he knows better about this stuff. Restaurant brands, QSR. It's a new company, I guess. New international. It's a new IPO. Liberty Global, Class C. Some kind of classes here is the shares. They have A and B and C. You can go online and check the meaning. Torchmark Insurance. It is doing so good. See, I don't know when he buys it, but it's doing so good. MTB, which is just Northeast Banks. It means it is regional, this bank, but he bought it. MasterCard, okay, so the stock was $4. Now it is 182. Excuse me. So let's continue very quick. Now Costco wholesale. Now I was thinking before. I say to myself, why Warren Buffett hasn't bought Costco? Because for me, I bought it when it was 85. Which year? I think it is 2012. When it is 85, I bought it. So in some kind of investment. Sanofi. Okay. There's a new company. Liberty Lila Group, Class A. IBM. Verisec Analytics. Diverse services here. Okay. Walmart is the biggest company in terms of earnings. So he should be with them. Lilac, another C. Mondelez International. So he is also looking for international companies also. So it's good. G&G is the biggest, one of the biggest companies in America about the drug manufacturers. One of the big. Procter & Gamble, one of the biggest also. Graham Holding. UPS, as most of you knows, UPS is very, very known. And Verizon Communications for the phone. Okay? So this is all for all what is holding. This can change maybe in the future. I don't know. So this is his holdings. Okay? So for me, I want just guys to share with you some kind of investment of Warren Buffett, because what does he say, Warren Buffett in general, that if you buy a company, any one that you choose, if it is growing good, that's it. And you don't need a lot of companies. You don't need to buy like him 50 or 60 or 70 companies, because you can't. He has billions of dollars, but he didn't buy hundreds of companies. He has only 48 or 47. Okay? So understand that that you should minimize your in order to buy a lot in each company. Okay, so James Armstrong said, "Good, thanks. Very interesting to see." Zaire Phoenix, thank you very much. Now, since we are speaking about Warren Buffett, but understand, he sucks the market dry. No, he doesn't suck anything. There are people who are following him when they know he buys a company, they buy after him. Okay, because he is very known. And people who are doing no, it doesn't. See, Trump. You say there is nothing left for us. This is only 48 companies from thousands. There are thousands that go better than Warren Buffett what he chooses. So don't understand that Warren Buffett, he picks the top. Okay? He has some of the top. But it is not all. There are some companies that they made a lot of money, but he didn't buy them because he can't buy all the market. Because if he buys all the market, he can't make money. He will be making like Dow Jones 7% each year okay? Now, this is the question I was waiting for you guys to ask, and Zaire Phoenix, he asked me the question that I want to answer just a few minutes ago. But he asked the question. He said, how did his money grow so large? How he made billions of dollars from stock market? And he's not doing shorting or selling short, or he's doing other things. How he made his money? Trump he said Warren is an old school. No, he's not an old school. He is a new school. He buys Apple also. Apple is just a few years ago. It's not an old company, very old company. Does he buy IPOs? Yes, I just showed you. Trump, did you see me right now showing you the IPOs that he bought? Okay. I just showed you in his portfolio his IPOs. I will go back and show you Trump in order to see, and then I will answer the question of Zaire Phoenix. So bear with me. I just go with the. Okay. Let's see. What is the IPO? Yes. Lilac, L-I-L-A-K, Class C. I don't know what that does mean, Class C. So you should see. He bought it. Okay? Because it is in his portfolio. Lilac. Now Walmart, no. Whenever, see, I will give you an idea. Whenever a stock is new, it means it is just put the year. Okay? Put the year here at the end here, the yearly. It means each candlestick is 1 year. This is 2008. 2008 here. We are in 2008. This is 2015, 16, 17, 18. 4 years in this company to be public. So this is an IPO. Walmart, no. VRSK, no. IBM, no. I will just see. Yes. Lilac Group Class A. Let me see other companies. Yes. QSR. It's Restaurants Brand International. So this is an IPO. IPO. Why we say IPO? First, when you see here, there is no sector or there is no industry. It means it has not been classified into a sector or into an industry. But this has 5 years. 1, 2, 3, 4, 5 years. So this is the IPO. So you say, for example, to me, the Does he buy IPOs? Yes, he buys IPOs. Excuse me. But IPOs, I will just give you an idea. Let's see here. So some people, they don't. Thank you, Phoenix. Thank you very much. I will. Trump, he said he didn't buy Google and Amazon. I will tell you why. He said, I don't understand their business. Because Amazon, what is it? Amazon, it is not making anything. It is just a platform where people, they come, they buy and they sell. It's a market, small market. But Amazon, what does it do? Does it produce, for example, milk or Coca-Cola, or it produces computer or produces something? It doesn't do nothing. Okay? So that's why Warren Buffett said, no, not all tech IPO will succeed. No. Okay? There are some that they go bankrupt. Because technology, there is competition. If you can't compete, you will be left over. See, for example, Apple and Samsung. There are a lot of companies before Apple and Samsung. They were having all the market, but now they are bankrupt. Are you going to tell me? And there are new companies coming. So it's not all. If it is all, okay, just go and buy IPOs. He didn't buy JP Morgan. No, he can't buy everything. But when he buys a lot. That's why he can't buy the whole market. You say JP Morgan or but he chooses what I think he compares these companies and he finds that company is better. Yes. Zaire Phoenix, he said, you didn't answer my question. Yes, I'm coming. I'm coming to you. Okay. The answer, first, Warren Buffett, he wants to do a lot of business. He has done a lot of business. When he was young, he sells chewing gum. But understand that chewing gum can't make millions for him. He does a lot of things. You can read his history, a lot of things he has done, but small. Now, what makes him first as a millionaire? It is not those things. How he become millionaire is by what we call partnership. I will Zaire Phoenix, I will go to the explanation and I will explain to you. Okay? That's why for me also, Zaire, I say Warren Buffett could never be a billionaire without something he has done, and this thing that he has done, no one talks about it. Because this is how he get millions of dollars at first, and then he continue. Okay, I will explain, so bear with me. Okay. Now, how he make his money is what we call partnership. Partnership. Now, what does it mean, partnerships? As you can see, partnerships is a broker account. It means just an account, okay, where you are the manager, you buy and you sell, and you have investors. Now, he has done, I think, 7 partnership. Now, how does this? It's like now this partnership. It's like a hedge fund, but it is smaller at that time, because at the first time he has done the partnership is with his family, his brother, sister, his friend. Okay. Now, partnership, what does it do? It means, let's say we have $100,000. This is all the money of all the people This is not the exact number. It could be 120 or 5, but I just give you an example. Now they say he put only $100. Okay, this is in the 50s, in 1950. This is so old when he began. Now what does he do? He put only little money, but what is the advantage that Warren Buffett has to make money? So what does he do? He will take, let's say, I just give you an example. Okay? Let's say he bought stocks. Let's say it is for, let's say, 3 years. Okay? 3 years. He bought some stocks. He put them, all these $100,000. He put them in stocks. 3 years. Let's say this $100,000, 100,000. Let's say it becomes $400,000 after 3 years. Now, suppose that the market is good and what he chooses are good stocks and they go up so good. So he make this money. Understand that Warren Buffett, he has half of the profit. Now, what is the profit here after 3 years or 1 year or 5 years? From 100,000 to 400, what is the profit? The profit is $300,000. What does he get from this $100,000? He gets half. It means 50%. This is how he made his money. So he is making $150,000 in these 3 years. So he is making money from the partnership. Now he has 7. Understand that from these partnerships, he became a millionaire. Now, after he got his first million, the other millions come very fast because a lot of people want to join his partnerships. And each year he gets a lot of money. Now, this $150,000, okay, it is his money. Plus his $100 here. This is funny. But it is $150,000 he gets, and this is his money. So 150,000, it's a lot of money at that time. And 150, after a few years, he put it in his own account, which is with partnership, but it is his own money. Now, after let's say the account now is $1 million. Just an example, okay? Let's say Warren Buffett has $500,000. No, not just $500. Now let's say he has 100. Just an example because I made in order to understand. Okay, they say that Warren Buffett, he has $1 million. 1 million, okay, and the partnerships, they were 7 million. What does it mean? It means that whenever there is his 1 million, let's say this $7 million, after 7 years or 10 years, this 7 millions becomes 100 million. Okay? 100 million. Understand that this 100 million from 7 million after 10 years, an example, but okay, just to make an example, 7 million becomes 100 million after 10 years because it's a long investment. So this 100 million, okay, this is 1 million, it is his. So let's say it goes 7 million. Let's say it is 10 million. At least the correct. I will make correct numbers. 10 million becomes 100 million. It means 10 times. It means his 1 million becomes $10 million. Okay? But understand that this 100 million, he has 50%. You understand that? 50% of 100 million, if we take this 10 million, it becomes 90 million after two. It means he will have $45 million from the profits. Now 10 plus 45, he has 55 million. So he's always getting 50% of this partnership until they bought all these 7 partnership. They make one partnership and they buy a stock which is Berkshire Hathaway. So let's begin another thing. So until he buys Berkshire Hathaway. Sorry for the handwriting. Now it is one of his early investments, and he said it was his worst trade he has done, because worst trade, although he gets some money from it, but the industry that it is Berkshire Hathaway is in textile, and understand textile after 10 or 20 years it was dying. It means it's not good investment. That's why, what does he do later? He sold his mills of this company, all his mills, he sold them one after the other. He took all the money and he changed his model, and he began to buy insurance companies, and from insurance companies he began to make a lot of money, and he buy Geico, which is I think a government insurance company. This is how he made his money. And when you are the first, when you get 101 million, this is the beginning, and then he has 50 million, 500 million, 1 billion, 2 billion, and it goes on. And this is how in general he yes it means you can read about his life, okay? But understand, a lot of people, they say he is the best investor. But understand that Jesse Livermore, who was only a trader, he has 100 million in his life. 100 million in 1930 or 34, when there is a crisis. So understand that other traders have done so miraculous things in the stock market, although with their own means, because Warren Buffett has used partnerships, and these partnerships that makes his money, because he's getting half of the profits. That's why a lot of people like him, they make billions. George Soros, who is a hedge fund, it's the same as partnership. He make billions also. Okay, so you understand that these people become rich because of what they do as hedge fund or partnership. But if he has his own money, do you think that he has $10,000 or $50,000 he can make as now? No, he will never make it. That's why some people, they don't talk about how he make his money at first, because when you have money you begin to buy companies, and then, but understand also that he was good investor. This is known, okay? And some years, if you see the stock market, the 40s, 50s, 60s, 70s, the stock market has been doing so good. I will show you right now. Okay, I will show you right now. For example, the Dow Jones. Okay, what did happen? It means in the 50s, after the 40s, 54, the market has gained. It was so good, and then it became going so good. So let's show you just an example as Dow Jones. Okay, so let's see. In order to understand this, let's see the life of Warren Buffett. 81, 61, okay? So this is the years where Warren Buffett was, but his choice of stocks was so good, that's why he made more than the Dow Jones. But see here, in 84, 83, when most of the big companies, retail companies come, okay? So the market has been going so good in this year. So anyone who has traded here, who has invested in all these years, he would have made a lot of money. But if you, for example, in 2008, you bought in January 2008, you will have the biggest loss if you have done this, because no one knows what will happen. Sometimes it is circumstances that makes you a lot of money. For example, 2009, okay? Warren Buffett, what does he do when the year is bad? He buys more. And the people are selling and he is buying. That's why after a few years, he knows that the market will be going up, because this is the nature of the market. So understand that the people, they understand, okay? So the people, they understand very well how this market works. That's why they succeed. But you can't, for example, time which year to buy. But he understood that when we have bad years, he buys more. Why? Because the prices will be cheaper and he can have more parts of the company, because he doesn't buy 100 shares or 1,000 shares. He buys percentage of the company. In this company, he is one of the shareholders. He can change the directors. He can change a lot of things because he has the right to vote for this company. Okay, and all the money, company money, what the company makes. Okay, he can give it to, for example, to executive and to himself, because he has a lot in the company, so they take as much as he has. That's why a lot of people they make a lot of money. But you understand that these things, okay, that these things, it will not show to the public. You should dig yourself and you should study and study and study. No one will give you secrets about something that he knows just like this online. You just, oh, buy this, buy that, prediction. No one is doing that. Okay, so as you said here, at age, yes, he said that by age 30 I will be a millionaire. Yes, he was a millionaire, but believe me, he has bought a gas station and he sold it with a loss. This Berkshire Hathaway, at first it was the biggest, he said by himself, is the worst trade he has done. Okay, because he buys a lot, but the industry was doing so bad. That's why when we say IBM and Apple and software, for him it is something that he doesn't understand, and he is right. That's why he tells people, if you are going to invest, try just to invest in few companies that you understand what they are doing, and that's it. But if you succeed, that's it. Pin, he said, these streams are excellent. Which streams? Are you speaking about the live streams or what? So, as I told you, a lot of people, they succeed because of something. Yes, he said he liked the people who was working hard at the small company. Ah, yeah, live video. Thank you very much. Now, Zaire Phoenix, understand that it's too bad to be working. Yes, you be working a good job and you have a lot of money, but you should at least do like him and invest in other companies and make more money. Okay, because he doesn't want to have a job, like a simple job. Okay, if he wants to have a single job, he will stay working as a stockbroker or any kind of job. And he was teaching investing. Understand that he was teaching investing because he has good education and he was a good student. Although they say that no, he should for Berkshire Hathaway. No, he sold it. He sold all the mills and he take all the money and he buy Geico. Yes, he did. Berkshire Hathaway is just the name that stays. It is the name for the whole portfolio. It's called or what we call the partnership, or this is what the name was. But this Berkshire Hathaway, the company, he has sold the mills to other people and he bought other companies like Coca-Cola, like Geico. When he goes to insurance, he finds himself better because he understands what they are doing, and they are collecting money from the people, and they have a lot of money. It means in their portfolio. Okay. Yes. No. See, Berkshire Hathaway is not an insurance company. Before, it was textile company, and then they sell the textile company, but the name stays. Now he buys, for example, when you say Berkshire Hathaway, what is it? It is all his stocks that he has in his portfolio. It's not insurance only. It is insurance, it is banks, it is Coca-Cola, it is a lot of things. Even Apple, it's all inside the Berkshire Hathaway. And the shares, someone asked me another question, why Berkshire Hathaway? It means the shares is so expensive. Let me show you, because a lot of people, they don't understand the difference between these two stocks. One is called Berkshire Class A and Berkshire Class B. So let's explain. So, Berkshire A, which is Class A, this is the symbol, and there is what we call Berkshire B. So what's the difference? Now, Berkshire A is now $310,000. And he wants to make a smaller stock called Berkshire B. It's the same. It's tracking Berkshire A, and it is now I think $206. Now, if you can't buy this Berkshire A, and you want to have the portfolio of this 48 stocks that represents, you can use his Berkshire B, which is $2,006, I guess, right now. Now this, why this is going so high and it doesn't and it is so high as a stock. This is not an index, this is a stock. You can buy, if you have $310,000, you can buy one share. Now, because there is no split, it means he doesn't, even the stock has been going higher and higher and higher, he doesn't split. It means he doesn't divide into 2 or 3, because Warren Buffett, he doesn't like his stock to be cheap. He wants only to play with billionaires. He doesn't want even millionaires. Because even if you are millionaires, a millionaire, you can buy 1 share or 2 or 3. That's it. So he wants to get billionaires to buy his stock. That's why the shares has been going so up. Now, if you want to track Berkshire, it means all his 48 stocks, you can buy Berkshire B. But there is no guarantee that you will be making money, because it is a stock. It can go up, it can go down. So understand that always there is a risk. Okay? So I can show you from yes, I can show you right now. Hello, Brian Loveless. You come late, Brian. We have been discussing this for 2 hours, but you can watch this video tomorrow if you like. Now let's go right now and show you the chart for Berkshire. Okay, so let's go and see the big stock. Berkshire A. It is how much? It is $310, $630. $310,000, $630. This is the price of now. Okay, this is a yearly. I'm speaking about the yearly. So see here how much it was. It was only 5,500. From 5,500 in 1990, it was only 5,500. Who can imagine that a stock that it is 500 could go to 310,000? So if you want to see how many times, let's say it is 2, 20, 40, 60, 60 folds. It means it's more than 6,000 out of 100. Okay, so it's now this is the Berkshire A. Now a lot of people, when they ask him, try to split it. It means it is too big. $310,000 just to share. So they ask him to split it. He doesn't want, but he get a solution to the problem. Now the solution, what is it? He creates another stock. It's called Berkshire B, and it is 206, and it was $19 in 1996. So I don't know if it's 1996 the beginning or no. Okay, so it was 1980. It means $20. Now it is $200. So it is like 1,000%. 1,000% in these years. So here 2008, see how it goes down? It is like other stocks, it goes down. And here in 2015 it goes down. I don't know why, but you know, it's the thing. So for the people who want just to follow him, but I'm telling you the truth. There is no guarantee that this will continue like this, going good. It might be they have a lot of people who manage with him. Okay, there are a lot of things to see and to manage, and maybe his son will coming after him to get the Berkshire like a CEO. So this is one of the things that you can think. So here we are just trying to see how this guy who is called Warren Buffett, he's very, very famous, but understand that whenever they ask him how to choose a company, he will never tell you. Now you ask me why? Why he doesn't tell? It is a secret. It is a business. It is his own business. He doesn't want to give his secret to anyone except to the guys that he is working with them, and they are so close and they are in the same boat. Okay, in the same boat, like his vice president, I think is called Munger or something, Charlie Munger, his best friend, and his that's it. So they know the secret how they choose companies. They know the secret that they continue with. So this secret will never be revealed. It is as if you say to Coca-Cola, "Oh, what is the thing you do in your Coca-Cola?" They will never tell you. Okay? Because it is a secret of business. Don't ask. You are just wasting your time searching why and why. But you can study investing books and you can get an idea. But because he said, whenever you buy, this is the main thing I get from Warren Buffett, as I watched his videos, and this is what I get. If you buy a company and it's doing good, that's it. He said that you don't need many companies. You need just few. If you succeed in 1 or 2 or 3 and you put all your money and it's going good, that's it. But understand that because the money is so small, understand that each year it go by percentage. The whole thing, the whole account. So no one knows. It depends what you bought. Sometimes you get 10%, sometimes you get 20%, sometimes you get 5%, sometimes you get minus, depending on the market, depending on the industries, depending on the companies. There is no one who knows directly that this company will be the best in the industry. Okay? So don't try to, you can learn about investing, but don't ask about secrets of people. They will never give it to you. You know, see, this Warren Buffett, he is maybe 85 years right now. He is very old. But whenever they ask him how, he just, okay, my way. But he will never tell you. He will never tell people. And that's why whenever he go doing seminars, and he will tell them general things, but he will never tell them how. Although what he learned is in books. Maybe they are in books. But because he learned from this guy who is called Graham, and he works with him, and he taught him everything because he was working with him. This is the good thing. When you have a good teacher who knows what's going on, you can understand what he's doing, and then you can make money as him doing. And this is what Warren Buffett do, because he get a good teachers in his life. But when he understood, as they understood, and he have a lot of money than them, okay, he becomes better than them in terms of money, because he invests in his talent, in his skills. Okay, he was teaching investing when he was when he was young. It means, but in order to make it real, he goes to teachers. And those teachers, they taught him everything he wants to know about how companies work and other things. Brian Lovelace said, I need help picking a brokerage firm. I have a small account. I need finding a low cost with great execution brokerage firm. Kareem. So please, Brian Lovelace, send me an email, because you should search by yourself. And I will talk to you. Okay, so please, Brian, send me an email. Send me an email, and we can discuss this privately, because you should give me information about how much you have and where do you live and other information. And then I will show you how to search and how to pick one, because picking a brokerage and to tell me it is good, it is bad, and then if you have a problem with him and you tell me, oh, it's you tell me to buy, so you tell me to go with this broker. So I can't give you I tell you to do this or that. You should decide yourself when you know the information. So please send me an email, and I will ask you what information I need from you, and then I will show you how to search, because you should see what is for example, the minimum amount of capital you should have. Some brokers, they ask you no money. You just open an account and then you put money. Some they ask you 1,000. Some they ask you 10,000. Some brokers are for day trading. They are not good for investors, like interactive brokers. They ask you $10,000. They are for day traders. Don't invest in that, because they charge you if you don't trade. So there are a lot of things. You should see commission. Right now they are almost all the same. 4.95, 5, 6, 7. This is the prices. So there are a lot of things. And when you say I have small account, I don't know how much is this small account. Is it 1,000, 2,000, 5,000? And the broker is like a bank. Okay, it's just like a bank. It's normal. He can't push you to trade. If you put 1,000, 2,000, don't trade for 1 year, he will not push you. Because if he pushes you, you should, or he charges you not to trade, for example, you should just get rid of him and find another broker. Because don't think that you stay with one. If it is not good for you, you just change it. This is what I have done before. Now, I stayed with Options House, but this Options House was so good that it was bought by E-Trade. And when E-Trade comes, they raise the interest. They raise the interest rate. They raise the commission, and it is not good right now. And they even cut the what we call the virtual account. They cut it. It means there is no. So my broker E-Trade, it's not good for you, because you know it's. But for me, I have the old commission, so I am good with them, and I don't need their interest rate, so I don't need their money, so I am okay with them. So you see that in order to find a broker, you should work a little bit yourself. You should work and search and compare. Okay? So no one will just pick you something and give it to you, because understand that there is a responsibility. That's why for me, I don't ask anyone or advise anyone to do anything. Okay, you should work by yourself and choose a broker, or whatever broker is. It means it's just you see the commission and you see if there are no fees. Just try it. Now, if you find that it is good, you stay with him. If the broker is bad, just stop, take your money, and change it to another broker. I also want to open a Roth IRA and use it for trading. I found just to trade, but I am not sure why it is so cheap. Okay. Brian Loveless, I have been with Just to Trade. Just to Trade, the execution is not good. That's why it is so cheap. I think it's $2.50. But it could be good if you are an investor. For example, you buy and you leave, so there is no problem with that. But if you are trading and you become, because for me it happens to me, I find this $2.50, so I put money, and then when I begin to trade, it's so long. I just buy by the ask, and I'm waiting 1 minute, 2 minutes, and there is no, and I don't see anything. I call them and say, what's the problem? And I understood that they have bad execution, so I am not going to stay with them. So I take all my money and I change it to other broker, which is Option House. Okay. So it's good. You are searching very good in terms of, but execution, no. Just to trade is bad. At that time, okay, it's like many years ago. I don't know right now if they are doing so good. Try to check big brokers, and you will find it's $4.95 or $5 commission, and that's maybe it's good for you. Okay. So I hope you have got some information about Warren Buffett, how he made his first $1 million, and how he becomes big, and how the choice of his companies no one knows, but it is based on the value of the company. So you should read books if you are interested. Okay. But understand that there is no secret. He will never give you a secret in his books. Maybe you will be reading his books and you think that you can get some general information, but you will never get his secret, because he will not publish his business to the people, because he let the business to his son. Okay, he will be his CEO again. So his son interest is not to give information to anybody else. Okay, so understand that all this has a kind of business. So thank you very much for watching. Please, if you have some question before I end up, we have been 2 hours and 26 minutes. Please, if you have another question about Warren Buffett or something else, I have made videos before. You can watch them also about investing. It's just to get an idea about investing and so on. I have another which is training level 16. I have a training speaking about how to invest in dividend stocks, because understand, dividend stocks and growth stocks are different. I have explained in the video, but it gives you a lot of information, which is called training level 16, which is how to invest in dividend stocks. It speaks also about tax. Those who are in America, I have some information about tax. So you can just check that if you want that. If not, you continue reading books and you select your companies as you like. No one will oblige you to do anything. And we are here just to see general things, general ideas. What is it, Loveless question? You put a question mark about what? So yes, he has tons of passions. Yes, because he is an investor. He is not a day trader, or because he has a lot of money. But understand that some people, they are quick in decisions, like George Soros. He was a hedge fund and he do shorting stocks. For example, Warren Buffett is not about shorting because he owns companies. He doesn't want the company to go down in price. He wants the company price to go up in order to make more money and to get dividend. This is what he wants. He wants more money from dividend, not to buy and to sell. And there is another thing that I want to tell you before we end. It's about tax. If you buy and sell like we do, swing trader or day trader, understand that you pay the highest tax possible, because all the money goes to your income, and all this you will see the income. If it is more, you will pay more tax. But for him, he is getting dividend. Now dividend, when he gets dividend, he pays only 16%. So as he said, it means it is not my words. He said it by himself. You can watch his videos. He said that he has billions, like $40 billion or $50 billion, and he pays less tax than his secretary. His secretary, which is a woman, is paying more tax than him. Why is that? It's just because he's taxed only on his dividend, which is 16%. That's why he is not going to pay more than you guys. But you are paying high brackets. It means the money that you pay, it goes to the government. It goes to the police, it goes to the streets, it goes to other things that your community is, which is very good, but they take too much from you. Brian Lovelace said, do I pay taxes on my profit gained from the both IRA? Oh, no. Brian Lovelace, Roth IRA, not Roth IRA, you don't pay tax on the money, which is very good. But they let you only, how old are you, Lovelace? If you are less than 50 years, like 49, or if you are less, you are 35, it's so good. So I think this year is you can put 5,500, but you should do it better before April, I think 17, or you should make the account and you put the money right now. Don't wait until the I think after the 17 April you can't open an account. So you should ask your broker. I don't know if this year is 5,500 is all the people under 50 years, like 49, 47 under. Since you are 35, you can put 5,500. If you are 50, you can put I think 6,500, I guess. And each year you can put. So Brian Lovelace, are you married? You can make an account for your wife also. If you have a lot of money, you can put in the account. You can make, or your wife can make another one. So you will get, each year you should put that money. Each year you should put, and you make your account bigger and bigger and bigger. And this is very good for you. You are young. You are only 35 years. You have many years to invest and to trade, and you don't pay tax. That's the good thing. But understand that if you want to take your money back, the profits, you can take them until you are 59, 6 months. It means until you are retirement age. This is the profit. But if you want to take your money that you put, you can, and there is no penalty. There is nothing. There is one guy who comes here. Who is it? This guy? Oh, Ab Ventures. Where are you, man? I have been looking for you. Karim, what if I am at a loss for the year? Do I still have to pay taxes? No. The good thing for you, Ab Ventures, you can ask your broker to claim there is $3,000 you can claim if you lost. Let's say if you lost 3,000. Oh yeah, you are just watching me and you don't. It means you hide from me. Why you are hiding from me, man? You have been very active in asking questions. That's very funny. Okay, it's very good. So Ab Ventures, go to your broker and you give him your statement. It means from the broker. You go to your tax preparer and you will ask him to, because you have a loss, he will do this for you. He will take $3,000 or 2,000, whatever you have lost, and it will be cut from your income. But you don't pay tax because the government doesn't. The tax guy, he doesn't want to take money from you because you don't make money. So he's a very good guy. Okay, so don't don't be scared. No, you don't get, no. Ab Ventures, don't understand me wrong. The government doesn't give you your money back. You lost it, but you will not be taxed that much. For example, I will give you an example. Please bear with me. Bear with me. Okay, let's say you lost, this is the maximum that you can claim, $3,000. Let's say you make $33,000, okay? And the government will tax you on your income. This is your income, $3,000 that you made. So the IRS will tax you, for example, on this $33,000 that you made in your income. It means in your job. Now, if you lost, this is a loss. Now the government will, or the tax or IRS will take 3,000, so they will tax you only on 30,000. It means the tax bill will be less tax. Why? Because you have a loss. So this, you should go to your tax preparer and he will explain to you, because I can't explain that much. So you go to your tax preparer and and you ask him questions. He will explain to you. But Ab Ventures, when you lose money, it is over. The market, it means other guys took your money in the market, so, and you don't know them. If you lose, it's your problem. Okay, so this is another thing. Randy Brathwaite, how are you? I haven't seen you before. Do you pay on the commission for buying and selling stocks? Yes. You should, whenever you buy, even if you buy one share, you pay the commission. You sell one share, you pay the commission. So the commission is for the broker, because he will link you to the exchange, to the market. He is paying money to let you trade, buy and sell. So he needs to make money also. Okay? Okay, Ab Ventures, thank you very much. Ab Ventures XD, try just to ask your broker, your tax preparer or your CPA, and he will explain into details how it works. Rajiv Gandhi, he said, what do you think about Bitcoin or crypto? See, I don't do Bitcoins or cryptocurrencies, because they are like other currencies. They go up, they go down. If you want to trade them as a day trader, you can do that. But for me, I don't understand how this go up and go down. I understand only stocks. I don't go. But I have some videos if you want to watch. Please put Bitcoin into my channel. You will have 6 or 7 videos. I will explain to you the thing. Okay? In videos, I have a lot of explanation. Brian Loveless, if there is a cap on how much money you can put in the Roth, what happens if you make a profit higher than the cap? No. They don't care about your profits. The only thing, this is a government help for people who want to invest and they want to give them a tax relief. The government is thinking so good about the people who don't have that much money. And Roth IRA is a good thing, because when you are making a lot of money, like a doctor or a lawyer, you are making $250,000 or $3,000, you will not make a Roth IRA. The government doesn't let you do one. Okay? But it is good for everybody who have the limit. You can ask your broker and you say, what is the limit? I don't know the limit. But if you are not making that big money, like a lawyer, like a doctor, you can open one, and you open it before the tax thing finish. So you should go now and call your broker and see if he has a Roth IRA, and that's it. You can open an account and you can do a contribution. Each year you do only one contribution. You can't do more. But when you trade and you make money, who cares? The IRS doesn't care because they don't tax you. So even if you make $1 million, they don't care about you. Well, they say, okay, take all by yourself. But the profits, you can't take the profits from your account until you are 59, 6 months. This you should understand. But you can take your own money that you put. If you take your money that you put, let's say you put $5,500 last year. This year, your money doubled because you trade, you are very good. It becomes 11,000. You can take 5,500 about last year, okay? And you leave the 5,500, that is profits, there in the account. The government will tell you nothing. They will not do a penalty or you pay tax. But if you want to take 11,000, all the money, don't do that because they will do a penalty and you will pay tax, because the profits you should never touch. This is what they say. Okay, you can ask them. You can call IRS or you can call your tax preparer, and he will explain more and more. For me, I have general information. No, you don't pay profits because the broker will not send the information to IRS, because Roth IRA you don't. So I just told you, you don't pay a tax. Okay, you get it? Thank you very much, Brian. But understand, Brian, you can go to your tax preparer or your CPA if you have a big account, and he will explain to you everything about the Roth IRA. At least you will understand before you do this account. Because understand that if you need all your money and you have profits, they will not let you take your money. You should pay penalty or you should pay tax, because this is the rule. So you should follow the rule not to have problems. But let's say you are 35, 10 years, you are putting each year 5,500 each year. You have a lot of money, and then you trade and you have a lot of money, or you invest. You can one day you can take all the money that you put, and you leave your profits for when you are retired. Yes, you can do that. And you take all your money. You can let's say put a down payment for your house, or you buy a car, or you do whatever you like with your money. No one will stop you from using your money. So hope you understand about this. So thank you very much, guys. It's 2 hours 42 minutes, and hope you enjoyed the session. Please, if you have questions, you can ask me questions. You can comment on this video. Please share my videos if you have friends on Facebook or Twitter or whatever. And if you have special questions, as always, I told you always, you can just send me an email or go to check my website. And this is all for today. So thank you very much, and see you next week.